Good morning, everybody. Welcome to today's 1 million by 1 million strategy roundtable for entrepreneurs. 1Mby1M, as you know, is the first and only global virtual accelerator in the world for technology startups. Our mission is to help 1 million entrepreneurs reach $1 million and beyond in annual revenue. In support of that mission, we do these roundtables, free mentoring roundtables, week after week after week. This is the 549th session. We started way back in the fall of 2008, and that was an experiment. The experiment was successful, and it led to the 1 million by 1 million program. And now, of course, we have a very large community. These roundtables have been attended by a couple 100,000 people, and our full, community footprint is a lot bigger. The event is being recorded. Every single roundtable recording is available on the 1M1M Roundtables channel. On Twitter, we're at 1M1M and at Romana, and today's hashtag is 1M1M. The DataStax 1M1M Startup Challenge is on at the moment. For developers, entrepreneurs using Cassandra, or entrepreneurs building companies on top of Cassandra, DataStax Enterprise, or AstraDB. You're very welcome to apply for the challenge. Winners will be getting a one-year scholarship to the premium program, 1M1M premium program, and also a one-year license to AstraDB, as well as a $10,000 prize. So the deadline for the application is Thursday, October 28th. So you still have a few weeks, and we'll announce the winners on Thursday, November 11th. Application URL is on your screen, and Maureen will put it on the chat as well. Now, I want to just comment one thing about the DataStax 1M1M Startup Challenge, and if you're here through that program and you want to ask questions, you're very welcome to do that. We have learned that there is a community of developers out there who have jobs and who are bootstrapping startups with a paycheck. We're actually very supportive of this mode of entrepreneurship, so don't feel apologetic about this. DataStax itself was founded in this mode inside of Rackspace, and Rackspace ended up becoming an investor in the company, a seed investor in the company. So you never know what is going to happen and how your entrepreneurship is going to be viewed in your company and so on. So, feel free to bootstrap startups with a paycheck is my message to you. And if you have questions about that, we'll address that a bit later. We are going to start today's roundtable with a conversation with Jukka Aranen, Senior Vice President of Strategy and Corporate Development at PagerDuty, which is a public company. Jukka, welcome to the show.
Thank you, Romana. Thank you for having me here and hosting this roundtable. I think it's wonderful how you're supporting entrepreneurs with 1 million by 1 million, and I'm glad to be sharing my experiences today with your audience.
Fantastic. Jukka, we're going to tap into your expertise to learn more about exit strategy, which is, I'm sure everybody at some point of their entrepreneurial journey actually has to think this through. We just sold the company in 1 million by 1 million. One of our companies just got acquired. So we're going to be writing about that shortly. And also, one of our companies just announced a $4 million Series A this week. So Maureen can share that announcement as well. So there's a lot going on right now. As you probably know, that the biggest success story out of 1 million by 1 million, Freshworks, went public last week at a 10 billion plus valuation. And that's, took about 11 years to get to that milestone, but it's a major milestone. So we've had a lot of action lately. So Jukka, I want to ask you first to kind of set some context about, I know you're a veteran in the corp dev world, and also a bit about PagerDuty so that I can put all that in context in my follow-on pursuit of the topic of exit strategy from the buy side.
Sounds great. So as you said, I'm currently SVP of Strategy and Corporate Development at PagerDuty. PagerDuty is a software as a service company. We provide what we call the operations cloud for modern enterprise that helps companies run their operations in the digital always-on world. My team and I lead corporate strategy, strategic planning, corporate development, and M&A. Previously, I've had similar leadership roles over the past 20 plus years in multiple VC-backed companies, as well as in large software companies such as Symantec, and before that at McKinsey, where I helped clients with their growth strategies and M&A. And I've had over the past 20 plus years experience from both sides of the table, buy side and sell side. On the buy side, I've been in tens of M&A deals ranging from less than 1 million to over $1 billion. And on the sell side, I've sold startups and VC-backed companies to both a strategic buyer and to a private equity buyer, which is a financial buyer. And the experience across both the buy side and the sell side gives me kind of a 360-degree view of M&A, as I believe it's really important to understand the motivations of both the buyer and the seller, and how do you align interests and make it successful for all stakeholders. If you're on the sell side, it's important to understand how the buyers look at this, what they're going through. And on the other hand, if you're on the buy side, it's important to understand the seller's journey. And also, I also think it's important to understand and have empathy for what the seller goes through, as often the emotional aspects are underappreciated, and I know how much it's very much an emotional decision for entrepreneurs and management teams, especially in small private companies.
So let's start with kind of a logic of how do you think about acquisitions, what to acquire and why?
It really starts from the strategy. We think about what is our vision, what are our objectives, what do we want to grow, what gaps do we have in our portfolio, what do we want to expand. So it starts with the markets, the categories, and the themes that are strategically important. We prioritize those and look at where does M&A fit, where could M&A add value. We often also think about this from the perspective of buy, whether we build something organically in R&D, or whether we build something organically in R&D, or whether we buy. So we consider whether to organically fill those gaps and expand, or whether it's better to acquire. Once we've defined the focus areas for M&A, then it's really about identifying and focusing on the specific companies that could be targets. We map out the landscape, identify potential targets, evaluate and prioritize them for consideration, and then cultivate and build relationships with them to get to know them, and then further evaluate the mutual fit and interests between our companies. And I want to highlight that this is usually a proactive, systematic process driven by strategic direction and strategic needs. Usually it's not opportunistic, where we just react to inbound interest from some company that is for sale, or from an investment banker. We do review those, we get a lot of those also, but most of the time it's not reactive to a brand new company that we didn't already know. Usually we already know the company and have had some engagement with them. Now, I think it's also important to highlight different types of acquisitions. When you're considering selling your company, it's good to understand which type of acquisition it would be from the buyer's perspective. So I'll briefly just highlight these 4 different types of acquisitions. One is what I would call a new product line or a new product SKU, which helps the buyer expand to a new market or new category, and they can plan for significant revenue growth. The second type is what I would call a technology and talent tuck-in to an existing product line where the acquisition helps accelerate the roadmap and increase competitiveness, even if it may not be directly monetized as a new product. The third type is then consolidation in an existing market to acquire customer base, gain market share, and drive efficiencies. And the last type, the fourth type, is an acqui-hire, where the technology doesn't get directly used, it may be thrown away, and it primarily just adds valuable talent for the acquirer. So when you're on the sell side, it's also valuable for you to understand how is the buyer thinking about how you fit into these types of what type you would fit in.
Let me take some of the things you said and double click down on a few of the points. First point I would like to explore is build versus buy. Can you step us through a little bit of the logic of how you determine the answer to whether the company should build or buy? Is there a dollar amount that drives that decision, or is there a dollar logic that drives that decision? Is the time to market logic that drives that decision? What is the framework of that decision making?
Yeah, there are multiple aspects to it. One is considering time to market. So big factor there is thinking about how important it is to get to the market quickly. How much time do we have? When would we like to have a presence in this market, or a new product, or new technology, or new capability? And then considering how much time would it take organically for us to develop those capabilities, launch and ramp up. And the time to market is not just product launch, but also how much time would it take to gain revenue in that area. So it's both the launch as well as how quickly then you would gain revenue. I think another important factor is related to that is what would it look like from a revenue growth standpoint. So you can compare buy versus build in terms of what type of revenue profile would you have in both scenario. And then it's the level of investment. So what type of investment would it take organically versus through an acquisition. I think another important factor is also feasibility in terms of sometimes the areas that we may be looking at may be very close to our existing capabilities, and then the feasibility is higher, and it's easier to do that by just extending what we're doing today. Whereas in some cases, it may be a different area where we don't have either the capabilities or the domain expertise, and then acquisition may be more valuable from that perspective.
So in a sense, almost like a feature versus product decision, right? A feature can be easily extended into, and a product takes a more judicious look requires a more judicious look at what can be done internally, how quickly, with what investment.
Yeah, it's really I would think about it as a multi-part rubric, if you like, in terms of thinking about is this a new product? Is it just an extension to what we're doing today? Do we have the technology and the capabilities and skills or not? Do we have the time needed to build? And then what would it look like from a revenue and financial perspective between these options?
So you haven't mentioned anything about valuation in this matrix of decision making. What role does valuation play in whether an acquisition happens or not?
Yeah, so at the end of the day, economics have to make sense for all the stakeholders for the deal to happen. And usually this takes multiple rounds of negotiations to see if we can find common ground or not. And making it work gets more difficult when the target has raised a lot of money from institutional investors, and especially if the target has already a high valuation from their last funding round. And currently, valuations and multiples on ARR and revenues are high from a historical perspective, especially with late stage companies. that have done large fundraisers, and it makes acquisitions really difficult at this time. Unless the company is struggling, investors are expecting high returns on their investment, which then raises the bar for acquisitions from a valuation perspective. And on the other hand, if a company is struggling, it may not be an attractive target then for a strategic buyer. Right. And at the end of the day, the higher the valuation, the higher the bar for conviction from the acquirer's perspective. So you need to have a very compelling must-have type of strategic rationale and compelling synergies that justify that valuation. And even then it may not get done. Now, I would add that from a founder, entrepreneur, and management team perspective, you should not just look at the upfront valuation, which you would call the nominal valuation. For founders, there are at least two parts to consider for your total economics. Number one is that usually the buyer can issue significant additional equity, such as RSUs or stock options for retention purposes. And that can add significantly to the overall economics for the founder. And point number two is that sometimes a portion of a deal or even all of a deal is paid with stock of the acquirer. And if you believe in the stock price appreciation potential, that can add significant long-term upside. And that's actually, when you consider these 2 points, that's where the economics may diverge between the founders and if you have institutional investors. As the founders get the retention equity and participate in the long-term appreciation, whereas investors don't. So the bottom line is that the more money you raise, the higher valuation you take from investors, the higher the bar is for an acquisition to work out. But obviously, large funding rounds can also help you generate very large outcomes, but it definitely raises the bar for the deal to work out.
Yeah. I'm a big believer in bootstrapping to exit. Startups with an interesting strategic product that achieves product market fit with no funding or a small amount of capital. There are companies that do capital efficient, fundraising strategies. Can have very successful outcomes for all stakeholders. And I think what you're saying about the current environment, we're in a very frothy environment. The valuations are very high. Unicorns are being minted left, right, and center. Almost every other day, there are new unicorns coming. There almost are over 1,000 unicorns in the market at the moment. Now, with those kinds of valuations, exits are very difficult to happen. Private exits are very difficult to happen. You better be doing something so hot that somebody is willing to pay, $1 billion plus valuation to acquire you, and that those kinds of acquisitions don't happen that often. So, as far as I'm concerned, I think that if you have what it takes to go for that kind of a, IPO exit, you can go raise lots of money. But if you think that you need an exit at some point into a strategic buyer, it's actually a better strategy to control your capital infusion. Would you like to comment on that, Jukka?
Yeah, absolutely. And I'll give you a case example. We acquired Rundeck last year for about $100 million plus additional equity retention. And they had been very capital efficient. They had raised only a few $1 million. And compared to the amount of capital raised, they had achieved a lot, both in terms of ARR and customer adoption and product and technology. And it's partly because they use an open source model to cost efficiently fuel their customer adoption and go to market. They were smart about outsourcing and offshoring and overall running a scrappy, lean organization. Yeah. This capital efficiency and the lack of large fundraising made it easier to make the economics work for all the stakeholders, and it really enabled attractive returns for the founders, for the management team, plus also their investors. If you can bootstrap, it gives you more control, flexibility, and freedom in how to exit and when to exit. The more fundraising you have and the higher your post-money valuation, the more constraints you'll need to deal with. I'd also note that while we're using the word exit, the acquirer doesn't want you to think about the acquisition as an exit. From the buyer's perspective, usually the expectation is that
Good
you'll
point.
stay on, highly motivated to continue scaling and accelerating, and the smart acquirers usually make this attractive and give you attractive economics to stay on. So instead of an exit, I would think about it more as a new path to take things forward as part of a larger platform.
Yeah, absolutely. Very good point. All the stock that you're going to get in the acquiring company and the retention bonus or retention options, all of that, RSUs options, all of those are part of the acquisition deal. So your compensation is a factor of all of those and not just the stated exit price. How do you access acqui-hires? Do you have a case study that we can discuss?
Yeah, I'll talk about that. I would note that first off, we don't usually proactively look for acqui-hires. We're open to considering those. We've evaluated multiple times. I've done one acqui-hire deal, but I would say it was more of an exception. Recall that we start from the strategy, where to grow, how to expand our business, how to fill gaps in our portfolio, and how to move the needle. Acqui-hires don't usually move the needle in terms of the business impact and the incremental value. So we don't prioritize those, but we can consider opportunistically. I would say that if you can bring not just talent, but also valuable technology that accelerates the buyer's roadmap and brings concrete product value to customers, that's much more valuable than just talent, and hence the valuations in a technology plus talent deal can be significantly higher than in a plain acqui-hire. I would say it's rare that the talent alone is valuable enough to justify an acqui-hire, especially given the hassle, the amount of work needed, and the complexity of doing an acqui-hire. Exceptions do happen. If you've raised a lot of capital, it can make acqui-hires even more difficult to make work. If you bootstrap or have a very small amount of capital raised, it gets a little bit easier. Again, exceptions happen, but usually the acquisition value and the economics for entrepreneurs aren't significant, especially upfront in a plain acqui-hire. And often these deals are structured such that you have to stay on for multiple years to realize the value.
So the previous example that we discussed was a $100 million acquisition that you made that had a few $1 million of fundraise. What kind of valuation do you use for acqui-hires?
It really depends on the nature of the acqui-hire, as it's very specific to the strategic importance. It's specific to the domain, the technology domain. It's specific to the level of the talent that you would be acquiring in an acqui-hire. If I give you an example, if you're in an area, let's say there's some highly specialized AI machine learning talent that you can bring that fits exactly the buyer's needs and would help them significantly accelerate their progress. It's very different situation than if it's something that is closer to just somebody hiring new engineering talent. So there's a wide range between those. I would say that in the latter case, the economics tend to be more like what you would call a hiring situation, hiring type of economics, where the upfront value is not significant. In the first situation, then it can be in the millions of dollars, and we would often look at that on a per engineer basis. But it really specific to the domain and how critical it is and how well it fits what we would be looking for.
Now, when you're looking at a new product acquisition, let's say the company has decided that you don't want to do an internal build, you want to acquire a product that's already in the market. How do you assess valuation, and what are the economics of such deals? Can you double click down into that scenario a bit more And if you have an example, it would be great if you talk about it.
Yeah, it depends on the nature, the type of the M&A deal. As I mentioned, there are at least these four types with, if it brings a new product, a new revenue stream that you can take to market, or if it's just technology and talent for an existing product line, or if it's consolidation or if it's an acqui-hire. When we looked at Rundeck as an example, a case example from last year, we looked at that, given that they already had a product that had meaningful customer adoption, and we had an opportunity to scale that business up through our go-to-market and our broader platform. We especially looked at that from the annual recurring revenue, ARR and revenue perspective, and looked at what type of revenue growth we would expect, what type of investments we would need to add. So we looked at both revenue multiples, ARR multiples, as well as when often we do things such as create a discounted cash flow type of model to look at the long-term view of the business and look at what would be the net present value to you if you acquire and make it part of your business. So it's really a combination of looking at revenues, revenue growth, investments needed, and then often also comparing it to other companies. It may be comparing it to other private companies. It may be comparing it to other acquisitions to look at how would this transaction compare to to what is being done in the marketplace. Now, if it's more of a technology and talent tuck-in, then we tend to look at more of a how much would it accelerate our roadmap? How much is that worth to us? What would this look like compared to an organic build if we did something R&D? And especially if it's earlier stage technology and talent or acqui-hire, then we often also look at what would that mean on a per engineer or per FTE basis, and look at how would that compare to the market benchmarks.
And any range on like revenue multiples in each case?
Yes, the revenue multiples have evolved significantly over the past call it 2 years as the market has continued to have what you could call frothy valuations, as you said earlier. The valuations, I would say that the reality is that the valuations ranges very large. There's very wide range of valuations. Whether you look at those on a ARR or next 12-month revenue basis, there's wide range. Now, I'll give you, given the spread of a range, I think it's important to look at some kind of factors that might help you dial in that range and where you might kind of be. Obviously, it's helpful if you can compare yourself to other companies and look at, how would you compare to other deals that have been done recently in your area, and look at, would you be in the same ballpark, lower, higher, or why? If you're a bigger company, you might get compared to public companies. Usually, if there's been a liquidity discount, and you would be, given your smaller scale, you'd be trading lower than what public companies would be trading at. But sometimes in the private market, recently in the very last 1 to 2 years, sometimes in the private markets, people have gotten even higher valuations than what's been happening in the public markets. But I think those are some of the things that you can at least consider to dial in the range and try to find comparable examples either in the public markets and in the M&A comparables or private financing, VC funding comparables, and look at then how do you compare to those and kind of start dialing in the range. I would say that again, it depends very heavily on your growth rate, number one. So typically, the higher your growth rate, the higher the valuation, as well as then capital efficiency, how strong your business model is, as well as how strategic you would be for the acquirer. But really, valuations can be all over the place based on those factors. So we try to kind of dial it in case by case, as opposed to kind of just having a simple kind of rule of thumb.
So in the industry, one of the best practices is to only hire products that can be sold through your existing channel. Is that the principle that you follow? Are there exceptions to that principle? Would you buy a product company that doesn't completely align with your channel, for which you're going to have to, introduce a new kind of go-to-market strategy?
Yeah, I think it's important to look at go-to-market, and I would say that we don't look at something that we're going to just only squarely fit our existing buyer, our existing go-to-market. If it sometimes there's actually value in being able to expand to new buyers, new personas, and expand that market reach and coverage. And if I just use what I mentioned, Rundeck as an example, Rundeck had a couple of interesting attributes. One was that they, in addition to development teams and DevOps teams, they had strong adoption in IT operations teams. And that was interesting for us in terms of being able to serve that persona with a very attractive product offering. They also had an open source model where you can use the open source community to get bottom-up adoption. And while we have a freemium model, we haven't had an open source go-to-market model. But that was actually interesting add-on to our go-to-market model, so that we can harness the open source community and tap into that community and work with that community, and then help kind of progress open source adopters through the funnel from free to paid users of the product. So I would say, if there's something that actually adds value to the buyer in terms of ways how they can expand their market coverage, it can actually be valuable. Obviously, from a synergy standpoint, you need to look at how quickly you can add value to the target in terms of growing their revenues and accelerating their growth rate. So we'll look at that specifically, but I would say definitely acquirers can be open to, especially
planning the channel,
new buyers or new type of go-to-market approaches.
Wonderful. Jukka, I know you have to leave, so I should let you go. Thank you for coming today. It was a wonderful discussion, and I look forward to keeping in touch. We'll talk again later.
Absolutely. Thank you, Ramani. It was great speaking with you.
Bye-bye. Take care.
Bye.
Folks, we are going to switch to the entrepreneurship pitch session now. And we're not yet ready for Q&A by dial-in, but you can definitely ask questions in the public chat. The public chat is open. Just turn it to send to all participants, and your questions and comments are going to be public. As for the entrepreneur pitches, whether you're pitching today or in a follow-on session, this is a safe working session. We have no other agenda other than, helping you succeed. So we are on your side. And you can disagree with my feedback, no problem. It's your venture. Ultimately, you're going to do what you want to do. So just listen, take into account the strategic points that I will make, and then you can decide how you want to play your hand. So Yugandhar Dodda is the first pitch. Do you have a short name? Yogi is your nickname?
You can call me Yogi. Friends call me
All
Yogi.
right. Yogi, what are you working on?
Yeah, first of all, I would like to thank you for giving this opportunity. I've been following you from 2013, if I'm not wrong.
Okay.
And the early stages of your roundtables, I was getting the invitations and all. I read your blogs. What you are doing globally, we are doing locally. What in your incubations and all that, we are trying to build rural social entrepreneurs. So VREAP is a social enterprise building and nurturing rural social entrepreneurs. So what do we mean by that is we pick up rural youth and women in the villages we train them and hold them. We nurture them to be social entrepreneurs in the village. And then we work on improving their net incomes month on month and things like that. So why and how this is, I personally have visited more than 1,800 villages in about 9 states of India. While we are actually asking questions, there can be n number of questions for all the problems that exist anywhere. But the one question which touched us is, what is that you have done? So picking that up, we know that there is a problem and there is a solution which we can give. We took the social entrepreneurship route, knowing that it is a challenging one, knowing that it is more of footwork and more of effort in the grassroots level. We had two choices. One, to build from grassroots up or top down using technology and drill down to that. So we took the first route of gaining the customers and gaining the social entrepreneurs on the platform, and then building the tech appropriate to the working environment that is coming up now. We are a 3 years young organization. Our social entrepreneurs work in the village, and this is the your impact map in the village. The social entrepreneurs work with children, with women, with youth, and with communities. The stress is on creating new jobs in the villages, upskilling the children for future generations, women, livelihood creation for women, and employability for youth. The social entrepreneurs facilitate all the programs in the village. Right now, we have about, you can go to the next slide, please. So how we are doing, the strategy is catch them when they are in the colleges and all that. We do multiple sessions across AP and Telangana now, where we are doing kind of MVP mode. So we train them on entrepreneurship and then pick up people who want to be change agents in the villages and then get them onto the platform. There is a very big process for that. You can go to the next thing. Yeah, the process is we have developed our own tools of self-assessment for these people, funneling exercise, basically in sales, it is a funneling exercise. And then we handhold them in the village, we set them up in the village, and from then, for us, each social entrepreneur is the unit of our KPI. We are now in 157 villages. That means we have 157 social entrepreneurs working with us now. You can go to the next slide, please. This unit, this is very important in a strategic point of view, because from here our revenues, I mean, each village is a revenue point for us. Each social entrepreneur is a revenue point for the entire thing. The strategy is get the people first established in the village, then get the end users of the village, be it children, be it women, be it the community, or be it the youth, and get them on board with the social entrepreneur as a point of presence in the village, and then build the ecosystem for the entrepreneur survival there in the village.
So how do you make money?
Yeah. How do you?
How do you make money? Is this a business?
It's a business. It's a pure business, social. And any transaction that is happening on the platform is business for us. The social entrepreneurs they self-fund themselves into this thing. So it's self-sustainable. And all the programs we run, about 18 programs we run, are all transactional based, and nothing is free. They are affordable by
you charge does these village
Yes,
folks pay you for training?
exactly. We say, for example, we run after-school engagement program. For after-school engagement program, we have created the elaborate content, everything, and all. The children come to the social entrepreneur for a tuition kind of thing for 2 hours. They pay the social entrepreneur whatever amount he decides. He is autonomous in that way to decide his own price. He pays a subscription of about 1,000 rupees for using the content to the platform. So there are, say, spoken English, then that is. So these are some of the numbers. Yes. So these are some of the numbers. Yeah, go ahead.
Is it in vernacular languages or is it in English?
It is, see, the objective is to get to the, not to compromise on delivery. So it is English and regional language together. They are highly customized to the area where we are working. And the customizing process itself is scalable. because we are building all the units as blocks so that they can be scalable. Only that component of regional language needs to get translated. Rest of the entire objects get recycled and reutilized, be it content creation or the platform, everything. So we have 19,000 college students. We have trained them on entrepreneurship. We work with schools, the social entrepreneurs. Through the social entrepreneurs, we work with institutions at the grassroots level, to 3-tier, 2-tier villages, towns, and all. So these are some of the numbers, and we are very happy and glad that our work got noticed by the government of Telangana, and they have given us 2 projects, though we are very new and we don't qualify for any of their tenders, kind of thing. But yet they have given us 2 projects. The 2 projects, one of them is developing rural entrepreneurship content for VHub, which is a government of Telangana's unit for women. So we developed that modules for them and all that. So this is the revenue traction. We have about 45 lakhs INR in revenue in the last 2.5 years, if I to be.
So 45 lakhs is cumulative revenue, not annual revenue.
No, it is cumulative. So we started with about 12 lakhs, and then in the second year we dipped to about 10 lakhs, and thus far the rest is the thus far thing.
Okay. So
our financial is from April to March.
Of about $100,000 for those who are following this discussion.
I did not get to.
No, I'm explaining to the people who are listening to this conversation, lakh is not an international term, so people don't understand lakh. So we're talking about just under $100,000 probably is the cumulative revenue, roughly speaking. And how many villages does this all these metrics cover? How many villages?
We are constantly in a growth thing. Now we are in 157 villages. So our first 157 villages.
So if you actually fully deploy your work in one village, what is the revenue that you can generate from that one village?
One unit now at a steady state, our metrics is we need to be able to get about 3,000 to 4,000 INR per month with all the programs in steady state.
And how many villages have reached that stage?
Now about 30% of them, not more than that. So our experience says that not all in the network are active at all the times. For any program we launch or do, because we are working on an MVP mode, our technology is not that strong. So we work with, say, Google Sheets and all that kind of thing. The effort invested is more than what that is there. If technology is there, then that actually, the traction is even more in that area. So these are the southern states of India. In the next 3 years, this is our target. This is the potential. How did we select the potential is, our calculations say that if the population is about 2,500 in the village, then only those are viable for our kind of operations. Our social entrepreneurs, decent earning can be about 9,000 rupees to about 15,000 rupees per month consistently. And that is proved now. So our effort is more on proving that the social entrepreneur can earn, that is the effort that has gone till now. Stabilizing services in the villages and all that.
Okay.
So that is the roadmap.
Go ahead, please.
Yeah, this is the team. I am the founder, and we have Miss Lakshmi as the co-founder, and all of us are entrepreneurs in by the definition of it. I am full-time, and Lakshmi is also full-time. Dr. Riaz is kind of supporting us on the education part of the entire thing. And Dr. Bindu Rathod also supports us on outreach programs and all that. So both of us work. You're paycheck entrepreneurs. The rest of the 2 are paycheck entrepreneurs. Right. So these are some recognitions I wanted to share, kind of thing.
Very good. Now, what questions? In the interest of time, tell me what brings you here.
I have 3 questions for you, ma'am. 3 questions. One is, do you think we are ready to go for funding? What do you say? because we have numbers, we have traction, we have impact also. We want to be very specific about impact funding to go to build the technology around it. So there is something more important is we want to have rural commerce as the bedrock of the entire thing. All this network we are building for that thing, which is the rural commerce thing, which has huge potential
I think,
there.
in fact, you are going to have to raise money through impact ventures. This is not
Yes.
traditional venture capital. There's no question that you're going to have to raise money from the impact world. We're going to need to work, for me to say, to the extent you can raise money right this minute, I'm going to need to understand better the monetization pieces, the elements, and what is the scalability of those pieces. So if I were to work with you, for instance, if you joined the premium program, and if I were working with you on a weekly basis, I would, deeply understand your monetization models and the pieces that you're using to monetize. The reason I asked you the question about vernacular versus English is this is a very important question. And those are completely different strategies. If you have an audience that can absorb content in English and can work with English language issues, that opens up a lot of different avenues of monetization, which vernacular doesn't have yet.
Can I interrupt a bit here, ma'am? We are actually testing the program in Tanzania with one of the partners and the South Africa. We have just started an MOU with them because these are all built as parts, each one and all that, each program. So few of the parts we are actually deploying them for a global this thing to test it out. I think in another 2 months, our first initiation thing will take off that way.
Okay. Interesting. So you're saying that you are building this as an English language program that has scalability and applicability in Africa and other places, and not just a vernacular. That is good because that increases your TAM substantially. Okay. All right. What was your third question?
The second question is I always get confused in positioning. As you can see, we are not able to position here or there. I'm spread across kind of thing. Is there any suggestion if you say now we are earlier we used to call it as more of a human tech enabled organization. Now we are sort of calling ourselves as integrated platform. So are we in the right direction?
It's not clear to me what exactly is monetizing. So I need to understand those in more detail to advise you. The positioning seems a little bit all over the place. It does need to be tightened up. You're saying you do microfinance, you do that. It's like too much. And no startup that is less than $100,000 in revenue, and not even $100,000, you're a lot less than $100,000 in annual revenue, can do so much. And you're not going to be able to convince an investor that you're credible in doing that much. So that's one of the things that I would say is a weakness in what you have presented today. I really respect what you have done, because I believe in skill development and, democratic development and entrepreneurship. I really respect what you've done. So you have clearly been able to do something, and you've managed to do that by generating revenues. All those are good points, but to really scale and if you're thinking about raising money, this needs a lot of work still, and that's just my honest feedback.
Thank you. We do agree. One test we did is we actually reached out to friends and relatives while bootstrapping. We wanted to raise debt. We asked them, we showed them the project when we were in 10 villages. But they did not actually want it to give it as debt. They said, we want equity. At that point, then we said, equity, we were not ready that time. We did not have the confidence to go forward. Now, after 3 years in working in 157 villages with revenues, proven revenues coming from each program which we are running, each program we test it as a separate unit for monetization. So we have clear demarcation for each kind of go out that goes in. The revenue is the net revenue I'm talking to the platform. So there is if you cumulatively call the revenue of the social entrepreneurs collections, it will be a lot higher. We are not taking that into our books for various reasons. We want the social entrepreneurs to be autonomous in this thing.
Are there colleges in these villages that you're talking about?
Yeah, there are 2 tier towns and 3 tier towns do have the colleges. Uh, so
So
those
across the
colleges,
150,000 villages that you're working in, how many colleges do you think you have in that coverage area?
in that you will have about 80 degree colleges. There are polytechnics, there are ITIs, vocational colleges. Uh, there are junior colleges where +2 is the higher secondary, if I am to use that word. And there are these
Okay.
little schools, private schools, not the government schools, who actually need support also. Through social entrepreneurs, we are giving, and nothing is free. We do it at a cost and at a fee.
Okay. All right. So did I answer all your questions, or do you have any other questions
Yes,
before
the
we go?
last final question is what you are doing is a great work globally, but the need is at the grassroots level. Is there any scope for collaborations in terms of business collaboration, if I am to use that word clearly? If
There is.
that can be explored, if that can be
In one
explored
of the
or
things
any
that
proof.
I will point you to something that you may want to look at. Maureen, could you share the Udemy affiliate link with Yogi or with everybody in the public chat? Maureen will give you the link. So you may have seen we have just started launching our Udemy courses, which is based on the 1M1M curriculum. And these are, the reason I was attracted by Udemy is that they have done an incredible price point. They're basically, we offer our courses in the $40 to $90 range, and they discount it and offer it at $10 per course. $10 is a price point that even the grassroots level in India can afford, or the
$10
grassroots level
is
in Africa can
about, yeah,
afford.
700. Yeah, they will. We also have our LMS. I mean, we use model. We have our LMS. There are about 100 courses there. So what I'm asking is, you have wonderful content in terms of strategies and all that. Your videos are there. Can we collaborate in converting them to regional languages? That's a very big
No,
potential.
no, 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 no. No, what I would like you, if you are interested, what I would suggest you do is become an affiliate, Udemy affiliate partner, and get this course out to. This is one of the thoughts that came to me in terms of if there are 80 colleges plus the the engineering schools or technical schools, polytechnics, etc. That is a community of students that probably are able to handle English language training, and some of these people are learning programming and technical skills and so on and so forth. So if you can become a Udemy 1M1M affiliate partner and sell this, you can actually generate a lot of revenue for yourself.
Yeah, we'll definitely explore, and I think we can talk on the business of that at a different point once we actually start exploring that. But we are very keen to take your programs to the grassroots level because
This would be the perfect way to do that, actually. This actually, the price point fits, the model fits, you can make money off it and everything. All those pieces are currently in place. So, and if you can take it to
there
the
is a
grassroots,
need. There is a need across continents to the grassroots level.
absolutely. Absolutely.
So
But
we
you have,
wanted to
I mean,
say
right now you have a ready audience where you have
exactly.
penetration. So I think that's where you should be able to get somewhere and, yeah, so that's something that you're very welcome to become an affiliate partner and start moving this into the grassroots level.
We can explore.
All right.
Thank you very much for your input.
You're very welcome. David, are you ready? Your video has disappeared.
I'm ready.
All right. Tell us what you're working on, David.
Okay. Good evening from Nigeria. Okay, basically, what an eelspace marketplace. So I'm going to start right now. So 2 years ago, we launched.
Your audio is strange. Maureen, what is wrong with the audio here?
Can you hear me?
I can hear you, yes.
Okay, so I'm going to start all over.
Try again? Yeah.
I'm going to start all over again. All right, so 2 years ago, we launched the eelspace working space, where remote freelancers in our community, Akwa State, would have access to constant light and strong internet connection to work and meet their clients. Immediately after the lockdown that we had in April 2020,
David,
as a result of
David, can you turn off your video and just speak through the audio? I think you have a bandwidth issue there in Nigeria. The voice may come clearer and more understandable if you just turn off the video. Try again.
Okay, I've done that. Can you hear me now?
Go on. Please continue with your presentation.
So 2 years ago, we launched the eelspace co-working space, where remote freelancers in Akwa State, that's the city where I stay, could have access to constant light and strong internet connection to work and meet their clients. Immediately after the lockdown last year, April 2020, we discovered that most of the freelancers were no longer coming to the co-working space. And then, so we had to conduct a survey, which gave us some results that showed that they were no longer coming as frequent as before because they had no jobs, they had no freelance job as a result of poor visibility and positioning. And then on the other end, we had business owners who were reaching out to us as an organization from time to time, asking us to recommend freelancers that can actually help them grow and build their businesses affordably, through the areas of marketing, branding, and software development, etc. So in June 2021, that's this year, we, as problem solvers, we decided to build and launch the eelspace marketplace, which is an online platform that connects top vetted technical talents in Nigeria to businesses who are in need of their services. Now, we're actually trying to solve the following problems. 5 million SMEs in Nigeria have little or no budget to hire talent. There are over 250K skilled freelancers who lack visibility when looking for a remote job. And over 20 million SMEs experience difficulty accessing a network of top vetted freelancers. Please, the next slide. So our solution is actually an online platform that connects business owners to top vetted freelancers in
Very
5
good.
clicks.
You're doing the Upwork of Nigeria SME, basically.
Yes, but we actually have a different business model associated to that. Please take it back to the previous slide. Okay, so our solution is an online platform that connects businesses to top vetted freelancers in 5 clicks to save time when hiring, grow and scale your business affordably, save money while freelancing. Please, the next one.
So it's a subscription service for the SMEs subscribe to your platform?
There's a subscription part of it where they get to hire talent. We get to outsource talent to some of the companies, while some of the other companies can actually come on the marketplace itself and actually hire directly.
So you're doing both subscription and transaction models?
Exactly.
Okay.
Okay, so our total addressable market size is 41.5 million SMEs in Nigeria. We're basically trying to see how we can target SMEs in Nigeria, because in as much as we want to provide visibility to the freelancers that are found in Nigeria, we also want to help the SMEs to grow and scale their business affordably. So our total addressable market size is 41.5 million SMEs. And then our serviceable addressable market is 200,000 SMEs because we're starting in our city, Akwa State.
So these 200,000 are, what is the qualifier? What is the specialty of these 200,000 SMEs that you're going after? What are the characteristics?
Okay, they're basically doing business in Akwa State and
in one state. It's your
Yes.
market penetration strategy is this state that you want to go into.
So sorry, I didn't get that question.
You are focusing on one state to start with.
Yes, I'm focusing on one state to start with.
Okay.
Yes. So our product allows business owners to search for the exact technical skills that they need, view their gigs and portfolio, chat with them, and then possibly haggle price with them such that they can create something called a custom order. And then finally, they can get to place an order for their services. So the business model, we basically make money in two ways. First of all, we take 20% commission on each transaction in the marketplace. And we also take 20% commission on each transaction paid by companies we have sourced talents to. And then the average price for a particular service on our marketplace is $5. And then we have the projected revenue of $10.8 million by 2023. And then from our second business model, which is outsourcing these talents directly to companies, the average fee from outsourcing is $100. And then we have a projected revenue of $21.6 million by 2023.
Really? That's a very, very aggressive growth rate. We're sitting at the end of 21. By 23, in 2 years, you are proposing to get to $32 million in revenue. That is a very, very aggressive growth rate. I think I haven't seen anything to believe that that kind of growth rate is viable. What do you have right now? Is it a concept, or do you actually have something going?
Yes, we've already built the platform, and then we are currently servicing over 30 businesses in our city, and we get to hire over 20 freelancers every single month. Yeah.
So you're looking for $5,000 to reach 1,000 transactions. That $5,000 need to be raised from friends and family. $5,000 is hard to raise from any institutional venture, but this sounds like something that you need to bootstrap for a while, and I don't think your $32 million in 2 years is a realistic number.
Okay.
So, marketplaces have certain dynamics, and they take time to start to scale. So you're going to need to figure out what are the customer acquisition costs, what are the SME acquisition costs, what are the talent acquisition costs, how are you getting these people to come on the platform and start playing ball and start transacting. These 30K revenue over 6 months is something you've already created, or is it something you're projecting?
It's something that we're projecting.
Yeah. See, if you do 30K in 6 months, how do you do 32 million in 2 years? It just computes, right?
Okay, basically we have a competitive advantage. If you can take it back to the competitive.
This is not a matter of competitive advantage. You probably have no competitor. That's not the issue. The issue is you cannot acquire customers or acquire, you cannot acquire business that quickly, and you cannot acquire freelancers that quickly. It costs money to acquire those two sides of the marketplace.
Okay, we basically created something we called Marketplace as a Service, where we actually give free access to free subscription for a year to community leaders, and then let's say top owners that have access to both the freelance talent and business owners who are reaching out to them from time to time to actually hire talents that are found in their network. So we are actually giving them free access to also own a marketplace similar to ours. That's one of the key competitive strategies that we're trying to use for our business.
Yeah, David, I would be thrilled if you get to 1 million in 2 years in revenue.
Okay. Okay.
So, so I think you need to adjust your targets, and you need to be more specific about how marketplaces work. You know, as we were speaking about Udemy courses, we have a course called How to Build Two-Sided Marketplaces on Udemy. If you look for a Udemy promotion and go buy that course for, you know, something like 10 to 15 bucks on whatever promotion you get next, and go do that course, you will get a view into how marketplaces scale, how marketplaces get developed, what, you know, you can see examples and case studies of other marketplaces to, you know, to understand how this kind of business works. I would strongly recommend you do that.
I'll check that out.
Okay?
Yes, I'll check that
All
out.
right.
Thank you.
You're very welcome. Okay, folks, that's all in terms of entrepreneur pitches today. If you like what we do here, please bring serious entrepreneurs into 1Mby1M. All our resources are at 1Mby1M.com. You will find a blog that, as Yogi said, he's been following since 2013. I'm very, very happy to hear that. You find that helpful. We hear that a lot, by the way, that people are following this blog for a long time. It has been around since 2005. I recently wrote a very large 9-part series on how to build a really high-quality blog and monetize it and so forth. So if that's something that you're interested in, you're very welcome to look at it. So that's, you know, that's one point. And then I would say that your other, you know, learning material is books. We have, you know, a dozen books that are case study-based books. You can start your learning there. These roundtables happen every week. You can come, you know, anytime you want, any Thursday you want. You can come as many times as you want. You can pitch once for free. If you want ongoing interaction with me on a weekly basis, you need to join the premium program. But otherwise, our premium program is the full acceleration program. We help you with extensive methodology, guidance, the full curriculum, business development help, strategy consulting. We also help you with financing and media relations. A lot of companies come to us to raise money, and you know, you kind of have to, just by joining the program, I'm not going to introduce you to investors. We work with hundreds of investors, and you know, this week, as I said earlier in the program, I said we have announced one funding this week. So we have investors who are willing to fund our companies, but you have to be fundable before I can send you to an investor. So just adjust your expectations accordingly, such that you have, you know, a reasonable expectation with which to navigate your journey. The self-assessment is a good place to start. It's on our website. It's free. These are the questions investors would ask you. You should go ahead and try to answer those questions. The bootstrapping course that is available on our blog is a under 1 hour course where we explain a lot of the bootstrapping techniques. And then the Udemy courses that we have released, that I was talking to Yogi about earlier, as well as to David, are a very good starting point as well. We have put out now about 28 Udemy courses, and we're working on more. There will be more coming. But it kind of gives you a very, very clean view into the bootstrapping methodology, into seed funding, pre-seed funding, all of that, a lot of entrepreneurship case studies in different domains and different geographies, and you can learn a lot if you just spend, you know, let's say you do a course a week and just develop over like a, you know, 3 to 6 month period. If you just develop this knowledge, it's like you're getting yourself a mini MBA in entrepreneurship, in technology entrepreneurship. It would be very helpful for you to get that under your belt if this is something you want to do, if you want to do technology entrepreneurship. Of course, the full curriculum is available as 1M1M Basic. You could also subscribe to that. That's $99 a month. So go look at the website. The programs are all explained in detail: premium, basic, FAQs, video FAQs. The curriculum is described in a lot of depth. We teach in case studies. People have done this before. most of the things that are going on have been done before by somebody or the other with nuances. So you can learn from other people, and that's really valuable to learn from other people and not have to repeat, perfectly avoidable mistakes. Our investor introduction section of the website helps you understand the policy. And the 1 million by 1 million mantra is do not go to investors as beggars, go as kings. And our methodology is bootstrap first, raise money later. So you do need to bootstrap first before you can raise money. That is something we will hold you to. That's it. We have 2 more roundtables in October and 3 in November. So lots of opportunity to come talk to me, come work with me here. And if you want to ask questions, now is a good time. You can dial in if you like. You can talk through your computer audio. You can ask questions in public chat. Whatever you like is fine. Irina Patterson is your contact to discuss the program. And Yogi, if you want to pursue the affiliate model, you can talk to Irina as well. I actually think you have a very substantial revenue generation opportunity if you want to become a 1 million by 1 million affiliate partner, Udemy 1M1M affiliate partner. So you should consider doing that because, you kind of need revenues to support the work that you're doing. You're doing great work, but it's not a hugely revenue generating work. So I think if you can layer on top of it something that is more lucrative, it's going to help you take that to the next level.
We want to explore it. We want to explore it. I'll get in touch with either of them.
Look at the material and then get in touch with Irina and you can start doing that. This is our, Maureen, you're missing the dollar amount, the $4 million, but Dharmesh has just raised money for his company and that's his testimonial. Any questions, folks? We do have some Q&A time today. Does anybody have questions? Yes, no?
Yeah, I have asked my questions.
Yeah, you have asked your questions. Okay, folks, if you don't have questions, I'm going to wrap up. But is there anybody from the DataStax 1M1M challenge that you are trying to apply for the challenge and you're thinking of, you have questions about that, or you're bootstrapping a project with a paycheck and you want to ask questions about that? No? I think I recognize some names in the room. I'm not going to call out, but I do recognize names from the from that world. Okay, well.
I'd like to ask a question.
Yes, please, absolutely.
Okay, so with regards to pitch deck and business models, so from the suggestion you've actually given me already, I'm going to try to see how I could work on the financials again and the expectations as well. And when I'm done with that, I wanted to know if I could send it to you so you can actually get to go through and advise me even more.
So if you want to work with me, David, you're going to need to join the premium program, and I will work with you on a weekly basis. So if you want to work with me on a regular basis, you have to be in the premium program.
Okay. All right. Thank you.
You're welcome. Binu Zakaria is asking how prospective is social enterprise model when it comes to funding. Binu, social enterprises have a whole category of investors. Those are called impact investors, and they factor into account the point that social enterprises, especially the kind of stuff that we talked about today, often don't grow as fast, and so there are more patient investors, there are impact investors. That's a slightly different model, but still, most social enterprise investors would want you to have a business model. They want you to have a revenue model. They want to have a path to profitability. All of those are still requirements. This is not a nonprofit. It's still a business. That's when those impact investors would invest. Does that answer your question, Binu? awesome. Anybody else? All right. Well, I'm going to wrap up for today, and I will see you next time.
Thank you very much. Thank you.
Dawood Shakir says, thank you, Shramana. I really found it very educational. We'll continue to attend these sessions whenever possible. Very good. I'm very happy to hear that you found it helpful, and that's why we're doing it. So when you say that you find it helpful, it makes me feel very good, because we put in a lot of effort into this, and we've been doing this for a very long time. Okay, take care, everybody. I'll see you soon.
Thank
Bye.
you very much.
Thank you.
Thank you.